please? Can I get one of these? Today, the Labor Department released some not-so-hot employment numbers, and while that's not exactly what we wanted, it's exactly what we need. That's why stocks were able to actually rally on that news. Dow gaining 69 points. It was higher most of the day. S&P climbing 0.09%, while the NASDAQ, which is tech-heavy and does well when the economy's really slow, dipped 0.17%. Why the heck are we rooting for really weak data? See, it's all about the macro. Now, I've never been a fan of macroeconomics. It's too big picture for me. But when our interest rates are much higher than the rest of the world, and the Federal Reserve is reluctant to aggressively cut them, well, the macro matters, and it matters a lot. That's why this disappointing non-farm payroll report was so important. It gives Fed Chief Jay Powell a lot more leeway to cut interest rates if he wants to. Remember, Powell's a traditionalist Fed chief, far more traditional than his predecessor, Janet Yellen. And traditionally, the Fed is a lot more concerned about preventing inflation than about keeping the economy roaring. That's why Powell wants to be so measured with these rate cuts, even though he was anything but measured with his rate hikes. Asymmetrical and wrong. The problem is this old school mentality is really starting to hurt the economy. Look, I get where Powell's coming from. I lived through the 70s. I understand the fear that inflation is always lurking around the corner, and if you don't stamp it out, it will wreck your economy. But this isn't the 1970s, Jay. Jay, you're an old economy guy. Come on. Powell doesn't realize that the new economy is inherently deflationary. Sure, we're creating tons of new jobs, but thanks to the impact of labor-saving technology, wages are barely going up. For an old economy guy, I'm sure that's puzzling. But if you watch the tech companies I have on this show constantly, you know they're all about letting companies do more with fewer workers. In short, the Fed doesn't need to worry about inflation. I think they should cut rates and cut rates aggressively to offset any potential damage from the trade war. Trade war, you know, I favor. A not-so-hot jobs number makes it more likely that Powell will do the right thing. So the bulls got their number. The president was still able to crawl about 3.7% unemployment, one of the lowest figures in 50 years. And it's unlikely we'll have to fight the Fed. That is great news, people. As the late, great stock sage Marty Zweig always used to tell us when he'd appear regularly on Louis Rukash's Wall Street Week, don't fight the Fed, don't fight the tape. The macro means we're not fighting the Fed. How about the tape? Okay, to figure that out, we got to go to our game plan for next week.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.